All right, there we go. I can hear myself. All right, good morning, everyone. Let's kick it off. Okay, last night's session in the States, on Friday session in the States, we finished another all-time high. Yippee! S&P starting to push slightly away from the 2000 level, only up by a couple points, but bottom line is we finished on the highs of the session. Bullish all around again. Consumer sentiment rises higher than expected. Highest number, I believe, in 6 years or something along those lines. We had Tesla that rallied, announcing a new partnership with China Unicom and building some China charging stations, and really just kind of finishing up another solid week ahead of a long weekend, which is the Labor Day holiday today, obviously in the States. This is actually it's kind of a big point in the year, because usually this is the week that most of the kids start to return back to school around the States. You got a lot of the big hedge fund managers and people along those lines that take the last week or 2 weeks off of the summer holidays to go spend with their kids out in the Hamptons or something like that. And so bottom line is a lot of the big decision makers are out of town, out of play in markets. And so as you saw last week and the week before, volumes really start to dry up hard. So you get that sort of week this week that is where a lot of things can start to really happen again. You start to get a shift in asset classes, sometimes a shift in sectors, and you really start to get a reallocation of money very often in the week or two following the Labor Day holiday. So should be an interesting week. Today probably be very slow because of the fact that U.S. markets are closed, but just keep that in mind. An Asian action overnight. We actually started the session mostly lower early in the morning, and we've managed to finish up in most markets there. The Kospi, the only one that was lagging a little bit. China actually performing the best after lighter than expected PMI numbers came in at 51.1, slightly below the 51.2 expectation, and lower also than the prior month's number, which I believe was at 51.8. So we had kind of gotten a month or two of maybe slightly better numbers out of China after a series or a long period of weak data sets over there, and then all of a sudden now it kind of looks like the data is starting to turn a little bit soft again. We've had some of the home sales numbers and the home price indicators and that sort of thing starting to show some weakness. So could be interesting to see how this plays out over the next little while, see if the data continues to come in soft. The Japanese Nikkei managed to finish slightly in the green, maybe on a little bit of a weaker yen, but other than that, I mean, there's very little going on over there. All right, chart of interest today. We've got the ECB this week on Thursday. It's probably going to be one of the more important meetings that we've seen out of a central bank in a while. Obviously, we just did have the Jackson Hole story, but I don't think anyone is expecting anything big out of that. What makes this interesting coming into this week's ECB meeting is the fact that we've got this continuing set of deflationary numbers that could or lower inflation numbers, and they're getting dangerously close to deflation over there. There's big expectation right now on Draghi to come out and do something spectacular. As you can see here, I mean, we hit deflation in Spain. I do believe the most recent data point, you can see there as well, out of Italy also has hit deflation. The only reason why we're not in deflation for the entire Eurozone probably is because of Germany, but Germany, things are turning soft very quickly as well. And I think he's going to come with obviously some sort of measures to try to stimulate growth. The thing that I'm interested in knowing, is if the market will think that it's enough. If the market thinks that there's anything that they can actually do to really get something going. Remember that you can't do a stimulus in the same way in Europe. At least the central bank can't do a stimulus in the same way that they can do it in most places in the world, because they can't control the finances and the budgetary means of all of those governments. So they can't go out and just start building railroads and, redoing infrastructure and that sort of thing across the whole of the Eurozone because they don't have the power to do that. So it's going to be really interesting to see if the market on Thursday, if they can come up with something impressive enough to have the market think that they can get this economy going, these economies going again. Right, we have Bidvest out this morning. Headline earnings per share at 17.33 versus expectations of 17.62. Obviously a bit of a miss there. Revs look a little bit better. Divvy looks a little bit better. I think, if I'm not mistaken, the earnings per share number a bit of a miss, specifically on the back of some of the flow through from AIP numbers. All in all, it'll be interesting to see how the market takes us. NAV up 18.5% to 1965. So also something interesting there. Like we said, obviously today is Labor Day in the States. We do have a couple things that are going ex-div today. We got Billy's going ex-div. We've got that's 68. I think that's 68 rand cents. U.S. cents. Yeah. Okay. So it says rand here. That should be 68 U.S. cents, I believe. I'll just change that real quickly. Then we've got Liberty and Consolidated County, whatever. So we've got a couple divvies here today out locally. So just keep that in mind if you're playing any of those on the open. Don't get caught up in that. All right. In terms of market data out today, like we said, we had the Chinese PMI numbers out earlier, softer on the HSBC end on the government number. We've got capital spending year on year, or we had capital spending year on year in Japan, also a little bit softer, as well as the manufacturing PMI there. We have GDP coming out, or that came out, in Germany earlier at minus 2 or minus 0.2 quarter on quarter. Came out dead in line there. Later, we've got PMI numbers pretty much across the entire Eurozone, along with mortgage apps in the UK, PMI in the UK, and then PMI here locally at 11. All right, let's get into the maps. We don't have too many things to look at this morning, but a couple nice setups maybe to look at. First thing we'll have a look at is Amplats. I think I showed this chart on Friday, if I'm not mistaken, Thursday or Friday, and really showing this little level of support that we were coming into, which you can see quite clearly. We managed to drop that on Friday's session and dropped it convincingly. So I think that, from this little descending triangle here, I think we've got a considerable amount of downside potentially left to come, maybe even another $30 or so. I wouldn't be surprised to see this thing trade to as low as maybe 420 or something like that, or maybe even a touch lower over the next few sessions. So just keep that in mind. Obviously, Impala's been under massive pressure. I don't think they've got the same sort of issues, but maybe following a little bit on the back of that. All right, we have Old Mutual here this morning. Sorry, I'm looking at the wrong chart. Yeah, Old Mutual dropping a little bit of flag support on Friday's session. Let me just get this lined up nicely. You can see here we've really just, after having quite a reasonable sell-off in Mutual from 37 down to 34, bounced up nicely close to 35.5. And we've dropped down to close at 35 yesterday, dropping a little bit of flag support. I'd like to see this thing push below 35 to get any real sort of confirmation here. The interesting thing is all the other the stocks in the sector have just been trading incredibly well. So I think we'll watch this one closely. 35, to me, there is a little bit of support at this level. So I'd like to see this thing drop 35 to get a little confirmation that this is potentially going to go a little bit lower. All right, next one we'll look at is CFR. We're going to look at this on the 2-year. I know we've looked at this chart several times, but bottom line is we dropped support, obviously, which we know, about maybe a month ago, maybe a little bit longer than that. And you can see here, we made so many attempts to get back above that resistance level, and it just couldn't do it. Getting through there intraday and just, only getting through by a couple cents. And I'll zoom it in here a little bit more so we can just see that more clearly. But it just kept failing over and over. Never really got a proper close above that level. And you can see this is a very well-defined little channel that we had and well-defined resistance at the moment. So as you can see, we've dropped that, and we've kind of dropped back out of maybe into making a little bit of a bear flag pattern here, and probably drop support on that. So I know we're still at 101.50, probably have a reasonable, open on this along with the market this morning. But if this thing starts to look soft again, I really think that this thing's it's absolutely battling and just really disappointing at every turn at the moment. And I think if we get below $100 especially, I think you can really sell this stock probably for as much as 7, 8, 10%, something like that. I think there's a big down move coming if it drops 100. All right, and the last one that we're going to look at is Naspers. I just wanted to show this again simply because we're coming right into this support level, which you can see obviously is quite a major support level, around 1350, maybe a scrap higher, however you want to look at it. And we've really kind of entered into a little bit of a range here, maybe between 1350 and about 1410, and we closed at 1355 Friday session. I think we got down as low as 1351, and I think we're probably getting a little bit of a reversal on the back of Tencent overnight in Hong Kong. But watch this one closely. I mean, if we drop, if we start to reverse to the upside, I'd like to see we'd probably be able to see a quick move up to about 1410 at least. And as so long as 1350 holds, I think the longer this holds, the longer this setup is going to take us higher. Technically, I really like this setup. I like how we first got up to the 1350 level, failed it, built some time just under it and pushed through, and now we've been kind of consolidating above on the breakout. So technically, this is a really, really healthy bullish chart still setting up here. Kind of reminds me of a bit of all the consolidation that we did back here in between September and November of last year. You can see all that consolidation we put just below 950, and once we finally got up through there in the end, I mean, it just took off. So keep that in mind. Maybe a little bit of significant upside here if we can get above this resistance. That's it for today, guys. Good luck out there.